presentation contains current opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone, and welcome to the Compak Market Wrap YouTube update for January the 16th, 2024. I'm Mo Ansari, President of Compak Asset Management, and thank you for joining me today. Let's start with, first of all, make sure you subscribe to all the communications that we have. Go to compak.com/media right down here. You can go to that website and subscribe to this YouTube update, the podcast that I do, which is a lot more detail with Javed and I talk about the markets, what's going on right now. And you can also get all the announcements, the weekly newsletter. All of it is free. Just go to compak.com/media. Also, you can make appointments simply by calling or going to the same website and making appointments to come by the offices wherever you are. Looking at the market for the week, market was up last week, up 1.87%. So that was not a bad week for the markets, but we are seeing the small caps sort of flat for the week, not doing much. We saw the Russell, the NASDAQ was up 3% last week, so a really good week last week. But, the first 5 days, how'd they go in January? So does go January, and how that goes January goes to the year. The seasonality is not looking good. The markets are down quite a bit today, and looks like the market is coming to the realization, I think, that we're not going to get the interest rate cuts that everybody was looking for. They went from higher for longer. That means interest rates are going to stay up for a lot longer than people thought. Then the change, the Fed is going to cut. Then they said, they're going to cut 6 times in 2024. They went from one extreme the market did to the other. And I think now it's coming back to reality that we're not going to get 6 cuts. We don't need 6 cuts. The economy is doing well. Market was hovering around all-time highs, is pulling back, and I think it might pull back a little bit more. I think the first half of the year could be a little bit more rocky and bumpy. That's the way I'm looking at it right now. We'll see how the rest of January goes, but February and March could give us a little bit of a correction. Technology came back. That was the one that we have been leading last year. It came back, and the ones that were leading the week before are the ones basically on the bottom. So the market flipped again, went back towards technology, came back towards that we're not going to get as much growth in the economy. Oil was just about flat for the week, not a big change there. Gold was down a little bit, silver also lower for the week. Interest rates, we are starting to see them come back up. They're hovering right around the 200-day moving average for the 10-year yield, so that's something we need to keep an eye on. Earnings expectations, again, they are that we are going to continue to see better earnings. That was expected. These are the expected earnings, and this is actual what happened. So we're looking at 3% in the first quarter, second quarter 6%, and we're looking at Q1 at 6%, then 11%. Then we see a little bit of a slowdown, and then an explosion in earnings in the last quarter of this year. So I think the most of the growth will be in the second half of 2024. First half, market is already looking for all of this growth already, and a lot of this has been discounted in earnings, I think, already. So we'll see. And when the reality comes that interest rates are not going to come down as quickly as the market thinks, that could also pull down. We did see headline CPI rise by 0.3% month over month, 3.4% year over year. CPI rose, the PPI rose by 3.9%. PPI fell 0.1%. Initial jobless claims fell to 202,000. So jobs are still doing well. Economy is still doing well. This week we get retail sales, which is going to be a good indication how the consumer is holding up. We get consumer sentiment, and then we get existing home sales, which should start picking up now that interest rates have pulled back a little bit. Markets are hovering right around the 20-day moving average. We are down quite a bit today in the market. The S&P daily, I think 4730 or 4700 is critical. And then we've got the 50-day moving average, which is around 4612. So I think the market should hover right around here. As we know, this is a third wave completion. Fourth waves are messy. They go up and down for a little bit before we finally get some clarification. So that's what I'm expecting in the market. Looking at the weekly chart, we've gone through an ABC correction. We've had a mini fifth wave top. So again, time for a little bit of a pullback here. 4,700 is support. And then the 20-week moving average is 4501, which is substantially below where the market is. We're 47, just about 4750 today is where we're sitting. Daily NASDAQ chart also hovering right around the 20-day moving average. But on the NASDAQ, seems like we've completed a fifth wave. Now, we might see an extension of this, but after we see a fifth wave, either we get an A, B, C correction, and these usually last, ABCs last a little while, so we could see back and forth. 14.4 is the 50-day moving average, and I think that support, we're around 14.9 right now, right around the 20-day moving average. On the weekly charts, also seems to have completed a fifth wave top, hit exactly our targets. Long-term target is quite a bit higher, but that could be a year and a half away. Again, 14.2 is the 20-week moving average, and then the 50-week moving average is 13,281. We're looking at right around 14.9 today, so we have a little bit more room here to go back and forth on the downside. 10-year yield up big today, up 12 basis points today so far, and we're looking at the 200-day moving average on the 10-year yield, which is right around 4%. We're at 4.07 today. We're at 4.06. We'll see where we end up. Crude oil chart, again, not much going on there. I think we are seeing, because of the heat up of the war against the Houthis and the Red Sea, we saw a little bit of a run-up, a little bit of a decline. I think, again, still the path for least resistance is to the downside. We're producing a tremendous amount of oil. We have become the largest producers of oil in the world again. Our production fracking has gone way up, and I think that'll keep the market in check. One of the things that I'm watching is small caps. Seems like we've completed a third wave. We're in the fourth wave pullback right here. We are down quite a bit today, about 1.5%. 190 is where we're sitting. 187 is the 50-day moving average, and that's also support right here. We filled this gap that was on the charts. We gapped lower today. We'll see. I think 187 could be a good area. If you want to add small caps to your portfolio, this might be the place to go. Those are my thoughts. Those are my views. Javed and I are going to talk about this in a lot more detail on the podcast today. You can go ahead and tune into that. You can subscribe to it simply by downloading the app, and it'll be automatically come to your iPhone whenever we do the update. Have a wonderful week. Again, I will be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moees Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compak Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that over-focus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.